Hello traders, this is Alex with the COTlive.com website. We're going to do our option review on our fictitious option program on these 36 different stocks. Again, for new viewers, um, we go through these somewhat ag stocks and chart them basis the quarter moon and the square nine of price with a two-box reversal method on a point and figure. Again, as this Apple chart shows, the trend didn't change till we hit this, and then that become the first week down. We also, have Gann's 1-to-1, cardinal cross, time counts in place as a reference. Now, again, it really doesn't affect what we're doing on this option program. If you were trading outright stocks, it'd be important, right? But again, on this program, we're doing bull and bear traps, right? So this was a bear trap, this was a bull trap. Both were activated and very successful so far. Let's review these charts real quick. I'm just going to thumb through them. So if you like a chart you like, then you might want to pause it. This is the Apple. Here's Caterpillar. Again, we're in this. Again, this is an important zone we just finished up on. It came in at noon today. Again, that's the let me move some stuff here. That is the in between this solar eclipse and this solar eclipse is right in the middle. Now, the interesting one about this one is a flip, what I call a flip. You can see that the solar and lunar back in April of last year, and prior ones were the solar was before the lunar eclipse, and this one was before the solar and lunar eclipse on October. Well, the next one coming up in March, April, the lunar is now above, in front of the solar. So that means that we gain a quarter moon on the solar eclipse and we lose a quarter moon on the lunar eclipse, making this one absolutely in between both eclipses now. So this January 11th is pretty key. I'm being a little more creative to find some trades because of the zone, right? I don't break any of my rules, but if there is a trade to be had, I'm putting it in place. So anyway, that's how it's charted. Here's Bank of America. Here's Ford, ATI, Wayfair, IBM. And you'll note a lot of these have some breakout mentality. Here's EOG, which made a new low. Now we have calls in place already, so I'm not implementing any new. Now these will go off actually today, so I'll be bailing out. I bought them on this bear trap, so again, I'm not going to implement any new ones since I have those on, and I'll have to wait at least 30 days. That's my rule, 30 days to get back into any trade that I might have gotten out of. Here's PXD, AT&T. Now again, you can see this trend did not violate the two-box rule. It has to get to here, right? So now even though AT&T had a bad day, let's pull it up. The actual chart. You can see the AT&T had a very ugly day, but it did not break the two-box method, so it's still long. So again, maybe a buying opportunity, right, if you're actually into the stocks, or that's kind of your program. Now this program is set up with strict rules. So like this bull trap on CME, we sold that, we got a confirmation, and we bailed out the other day, and we got out of 2 trades at our prices and 2 of them at the end of our 32-day window. NOG, PPC, ELAN, ICL, Visual Chemical, TTC. I also don't trade on my rules any weird gap markets. Like this one had a gap, and of course, then it had a gap up. I avoid these until it smooths out down the road. Um, Again, why? Because once they start that gapping stuff, they tend to keep doing it. I don't like that. Here's Bungie, which we were short, but we bailed out with a small profit because of the rules. Again, I woulda, shoulda, coulda. Well, I could have stayed in there. That's not the point. I don't care. I get out, profit, loss, break even. I don't care. I'm out, and then we move on to the next one. FMC, you can see that's been a quite disastrous move. We did have a break back. CNHI, again, following this trend of these markets for some reason, it had a one bust here, but did not break anything, so the trend is still up. Same way with CF Industries. Mosaic did break out to the downside. SQM really was ugly. Let's pull that one up on the chart, the actual chart. Quite interesting how it just fell apart. Something definitely happened there. I don't know if a report came out or what, but from 64.50 down to $50 in whatever that is, 10 days. I mean, that's a pretty hard smash without any relinquishment. TSN, NTR, ZTS. Now this one, we were already in, so I had to. I can't take this. There actually was a bear trap. I think it was ZTS, the one I was gonna. Yeah, it had a bull trap. Excuse me, but again, I just can't. I can't. Oh, that's NTR. We did take NTR. Sorry. The ZTS is the one that we didn't take on the bull trap because, again, not enough time has elapsed since we had it on prior. FDP, CTVA, ADM. Now that one we did implement. TWI, ALG. Again, Alamo, not the rental car company. I definitely had this spanked down, and we'll review those here in a second. Agco, John Deere, Sandridge. Sandridge is one where if we make a new low here, we'll be implementing a bear trap, buying calls for the bear trap. MRO. Now, some of these energy stocks that I have on go off today. Again, a lot of them I had pretty good profits in, just missed my first objective, and then it fell apart. And again, normally I'd be buying this bull trap, but I can't since I already have the calls on. I don't have to wait 30 days. So, Oxy, another one we have on. CVX we do not have on, and if it ever makes a new low, we'll be implementing a bear trap buying calls on that. Let's look at the stock summary. Now these are all these that we just looked at. Again, somewhat ag stocks. Most of them are. Apple, everybody has a phone, right? All these farmers have phones. Bank of America, Caterpillar, IBM, everybody has a computer, whatever. So again, kind of not quite a true ag stock, but I added it in there just because I wanted to, I guess. So these are all the stocks, and you can see I use the solar eclipse as my longer term reference, right? The difference between the two solars, October 13th, 2023, and our last one, April 20th, 2023. Again, it divides the year basically in half. So it's a perfect, I can go all the way as far as I want to go and tell you when the solar eclipse is. So it's a pretty obvious rhythmic method. And then so wherever it's closed at, Apple is above these two solar eclipses, so it gets a +3 rating at, again, max you can get. And if it's below, whoop, this one should be that one should, is a -3 right forward because the current price is below, and so on and so forth. So that's how these. Now I've kept track, right, of this right here. This is the total of these, and I always had to go back to the video to see what they were, and it took forever. And then also how many up versus how many down. Now this is all flipped from the previous video. Uh, I have made a new little deal here where I'll click this button and it'll save that data, right? So at least from here on out, I'll be able to tell you where it was at on the date that I'm doing the video. How many up, how many down, and I guess the index of all of them, of if it's a negative, positive, and where it's at. So anyway, that's a new feature I at least got on my deal. I should have had that on there. I don't know why I didn't. So that's the summary. Again, you can print that out, click it, pause it, look, review it. These are the trades we have on. Again, you can see these three go off today. Today's Friday, no trade Monday because of Martin Luther King Day. So again, we have a small loss in some of these. I do believe the crude oil is up about 263. So we'll see if we get a positive bounce, we might break even, make a little, lose a little. I don't care, I'm out, right? That's the rule. Even though I might be bullish. Now again, we're buying enough at least to cover our 35-day option expiration. So again, we bail out at 32 days, no matter what. And that's where this comes into play. All these, the MR, let's just look at the chart. Where's MRO? There it is. You can see that we're above you can see that this was our 3%. We were above that. That's what we have. That's one of my rules. Right? I have 4 simple rules. Has to be above this by this date. 15 market or calendar days over. It did not. I mean, it did. So we stayed in there, and I missed, I think, a sell by maybe 20 cents of the first objective. Again, we do 4 options always, and then I get out, double them every time. Anyway, you can see it went down and actually made a new low. And normally, if I didn't have this on, I'd be buying this today. But since I have it on and it gets off today, I'll have to wait at least 30 days. Again, simple rule. That's all I do. Anyway, we'll see. With the crude up quite a bit, it'll be interesting to see if they follow along. Maybe it can bounce back up here to this gap and get out with a small profit. Doesn't matter. Win, lose, draw. And then the other one is Oxy we have on. And again, it's kind of the same deal. Our 3%, for some reason I got rid of the line. So didn't make a new low yet, kind of filled the gap, but we'll be out of that. This one the CVX, the other energy, the Chevron, we won't probably get into that unless we make a new low. And the other energy stock was EOG. A similar deal, right? 3% up. It was a confirm, so we stayed in there. And again, we missed the objective by just a smidge. And then poof, down it went. So again, we are picking bottoms with these calls and puts or tops. So again, you got to understand that. That's important to realize that, right? Because that's why we have strict rules. We got to, because again, we're picking bottoms. So this counter trend pop turned into that, right? It was just a counter trend, get some stops, and then down. And now we're continuing down with a new market. And you can see that pretty important. I don't know why I'm wasting your time here. I just wanted to share this with you. You can see we kind of broke trend. Similar to this one, right? We broke that trend. So we're definitely, if you're picking this with stocks, you'd be pretty freaking nervous, I would think. In options, you have a limited risk deal. And some of these are pretty expensive. So you got to make sure that you don't blow your cash on a picking bottom trade when the trend, basically sideways in EOG, but still, that's where we're at. Anyway, so we'll be bailing out of those today. Apple, which is one we have on. We bought puts in Apple. And you can see this is where the day we bought the puts, it had to be here by this date, and it was definitely below that. And we did get out of a put or two, and so we have two left, I believe. Let me look. Yeah, we have two left. So, we got, scaled in a couple more down here. So, but the time is running out on that. So if it don't fall apart aggressively, we'll be out by the 20th. 20th is a Saturday, so we'll probably be out by the 18th because that's the moon phase, right? The quarter moon phase is the 18th. So we'll be out on this date no matter what. We got two left, so we'll be bailing out on that. Let's look at ATI. A good mid-level stock, and you can see that we bought puts here. Again, a nice bear trap because it isn't in new highs, right? It's kind of some secondary possible event. Now here's our solar eclipses, and that's the target somewhere down in here, logically, unless it's going to fall apart really bad. But anyway, so we got that in. We only have to go down a little bit more to hit our first objective. Again, we bought it at 310, those puts, selling it, doubling out at 620. So we're at 525 midpoint. So not too far to go if it's an ugly first part of next week. Now again, there's no trade Monday, so it only has 4 days left. So the time is pretty crucial. Let's go to AT&T. Again, we did it up here. It went against us a little bit and then had some ugly event. Now, even though it looks ugly on the chart, let's go to the moon chart. You can see that it did not violate anything, so we're still in limbo whether we're going to be right or wrong. Right now, we're wrong on this chart. So, again, it has to have a two-box reversal. Let's take this out. So maybe it will, right, depending on how it trades right away. Obviously, somebody got wounded. Again, that's what you expect, right? These bull traps, you expect it to not hang up there for 2 weeks, right? There's no new buyers. With no new buyers, it just falls apart. And it's a nice one because of what it's done over the past, right? AT&T is a declining stock. The values keep getting lower and lower. If you ever buy AT&T as a long-term investment, really no reason to, right? Basis the history, but let me look at a monthly.
Refresh finished.
Yeah, there's AT&T. It's down here in the gutter. I just not one that I'm favorable. It looks like it's going toast to me, but yeah, a lot of people trade it. So, and again, a lot of farmers have phone lines and internet, and AT&T is one of those. CME is the one we got out of the other day. Let me back up here. Let's go to the exit trades. Yeah, CME, we got out as two puts on the way down, and we had two left over that the time ran out on, and we did make money on those as well. Pretty good trade, actually one of the better ones. And you can see these are all the losses and profits, the exits, and pretty minor. The biggest one was this ZTS. It's a fairly high price stock in my opinion. We got a total of 48.79 of profit. Again, these are the trades we've taken off that are grayed out. This was the Caterpillar trade that I didn't have enough money at the time because I had all these other ones on. Again, I set myself up with a fictitious 25 grand account, right? So for this learning process on these option trades. So I didn't have enough money, so I didn't put it on. Now I did put it on here again. Since we have the cash, again, it's all about equity, right? You want to make sure that you have the equity. So here's our trade. We got to get down to here. by the 25th or whatever. So that's our new trade, Caterpillar. Again, you can see the bull trap, right? I mean, it's obvious. And again, I would have had it on here, but I didn't have the capital. So now I have some extra capital, took some stuff off, luckily with profits. Again, here's our profit and loss from that other sheet. This is our current value of the options we have on. Now, again, I'll be getting rid of all these today, except for Apple again. I'll get rid of these today regardless of profit or loss. So these would be gone, freeing up even more capital. But anyway, we've got 16 grand with the Caterpillar now involved. NTR is another one that we did today. Now, again, these trades, we get out. The bailout zone is the 12th. So we'll get out no matter what, win, lose, draw. And this is our 15-day. We got to have 3% profit by this date. So if we don't, we bail out regardless. So again, we got about 40 days, I believe, on the option. And what was the other one? NTR. There it is. Again, you can see we've had a trickler, right? Again, this low back here was 52.23. The low yesterday, the 10th, was 52.12. So we've taken out, not only do we have a bear trap here, but it's a new low bear trap. Now, I like this one a little bit. The chart looks a little ugly to me, but again, we don't care, right? If it's wrong, we bail out in 15 days. So, and take the loss, or a break even, or a small loss, small profit. Don't matter, whatever it is, we follow the rules precisely, right? So that's why I believe you guys can definitely make a little money. Now, the other trade that we did, so we're buying calls here, obviously, and then ADM was the other one, Archer Daniel Midland. Definitely a grain company. They do a lot of storage. We bought calls here yesterday. Basically, I quoted it from the close. So here's our 3% we need to get above by. Here's the previous solar eclipse. So again, I think this is definitely a target. If we get up there, it might not quite get filled on our first objective, on our first call. You can see that the first objective is 680. Now we always go, again, rules. We always do in the money, one strike. So as an example, ADM, we did calls. We did 67.50 calls. I always take the midpoint since it's fictitious. But you can see that there's the bid of 330 and the offer of 350. So, again, pretty active, right? I mean, only 20 cents difference between where you could sell it and where you could buy it and where you could sell it. So now, if you want to be real aggressive and you want in on it because you really like ADF, then you just put when you buy it, you buy 4 or however many you're doing on your program at 350. So you can see open interest 150 and so on and so forth. So it's definitely worthy. This comes from Bar Chart. I like Bar Chart. They have a nice programming and quoting system. So there's other ones out there too. But anyway, so that's the recent ones we've added. The next zone is the 18th, and the 18th. Yeah, we'll be out of these trades regardless, so I probably won't worry about giving you an update on that. Let me see, when is the 18th? 18th is a Thursday, so we'll be out of the AT&T if it isn't 3%. And Elon, same one, it's got to be that. So we have a few possibilities of outages if we get out a few. But that's pretty much the trade. It's a simple format. We're strict. Again, there's several. Some of these, um, made pretty good money if we'd have stayed in, right? But that's not the point. We're not trying to be a hero here. We're trading on strict rules. So, you personally have nothing invested, right? That's people have a hard time with their trading. Oh, I can't get out. I'll be wrong. I don't care if I'm wrong. I'm just trying to follow strict rules. So then that becomes you're never wrong, right? The system's wrong. Again, I know that sounds pretty unique, but it's a mental thing, right? To keep your mind out of the woulda, shoulda, could have trade, and just follow strict rules. That's how a system works, right? This is why this is a fund in itself. A pretty small fund, but 25 grand. But again, you can see out of all these stocks these ag stocks, 36 of them that we have, you take some losses, take some profits, and some of them I should have kept in, but I don't care, right? It's all about the return. It's all about making money, not being right. A lot of people try to be right, and that's a problem. It's a mental thing. I don't care about being right. I just want to make money. Follow a simple bear bull trap deal, and 30 days over, and it has to make 3% in 15 days. That's it. That's the rules. Poof, you're in and out. Anyway, I've wasted enough of your time today. Thank you, and have a great rest of your trading. Well, have a good Martin Luther King break. See you later. Have a good one.